Hello guys, it's Max here from Daily Market Movements, and in front of me we have the S&P 500 futures chart. Now, as you can see in today's trading session, we're trading slightly lower, roughly down 0.5%, and that is due to the fact we have the bond yields, which for a second session in a row are rising. Yesterday they shot through the roof. Long story short, this just basically means that the bond market has become more attractive, and therefore it forces hedge funds and pension funds, for example, to close in some profits, take some profits, so trim their positions here in the stock market and go and invest it into into the bond market, not the pension market, the bond market. So that's why we've seen some profit taking in today's and yesterday's trading session. Nothing major, this would be seen as a minor pullback. But you may be asking yourself, why is the Nasdaq down roughly 1.5% today, and the S&P and the Dow are only down ever so slightly? And that's due to the fact when bond yields rise, this affects mostly the growth stocks. So the likes of Apple, the likes of Amazon, Facebook, and this might also tempt some hedge funds and pension funds to, when they're trimming their positions in these growth stocks, they may look for the value stocks. So this is the likes of the financial stocks, the transportation stocks, the hospitality stocks, and that's why you see the likes of American Airlines, Southwest Airlines, they're all trading up today. United Airlines as well as yesterday. You also see the banks doing very, very well as well. Both the hospitality sector and the financials have been trading in the green for the past two sessions. So these are the kind of movements that we have been seeing yesterday and today. But it doesn't really change my outlook here for the S&P 500. Bond yields can only rise so far, especially when we're in a low interest rate environment. So I do anticipate these dips to continue to be bought by not just the retail investors, but of course by the hedge funds and the banks. Don't forget, there's been a lot of money injected into this stock market, and there was a record amount of money sitting on the sidelines with regards to the hedge funds and banks. So this money will be reinvested into the stock market, which will of course create higher highs throughout 2021 and going into 2022. So all these dips that keep occurring, for example, Apple's now currently off roughly 10% off its all-time high. Hedge funds would look at that and see that's a fantastic value, especially for a stock that's expected to go another 20 to 30% higher. If you look at some of the price targets given by Wall Street with stocks like that. So you will see money get reinjected into the indices, into these big stocks, and that will of course create higher highs. So right now, this is a buying opportunity. I would be a buyer of the S&P 500. RSI is down at 60, so that's called off, which is also even better if you are a bull in this market. So I'm a short-term, medium-term, long-term buyer. 4,000 is my target, as it offers a large psychological target. I think that we get there within the next week or so.